Financial market. Idea seeks to capitalize on market momentum. With the explosive growth of their subscriber base, telecom companies are all looking at capital markets to raise funds to fuel their expansion plan. Idea Cellular, the fifth largest operator in the country and the flagship telecom venture of AV Birla Group, has decided to enter the capital market to raise between Rs 1,700 and Rs 2,000 crore. The company has appointed J.M. Morgan Stanley, Merrill Lynch among others as book runners for the proposed initial public offer, which is expected to be ready by January end. Since under SEBI norms, the minimum float size is 10%, the company will divest between 10 and 12%. The last private placement made by the promoters is at a market capitalization of Rs 15,000 crore. The proposed float is expected to be at 10 to 20% premium of the private placement price. AV Birla Group recently divested 35% stake at the company to clutch of private equity firms. However, this is a fresh issue of shares where the proceeds will be utilized by Ideal Cellular for capital expenditure. After the proposed issues, the promoter's stake will come down to around 58%. You all know that a business needs finance from the time an entrepreneur makes the decision to start it. It needs finance both for working capital requirement such as payments for raw materials and salaries to its employees, and fixed capital expenditure such as the purchase of machinery or building or expand its production capacity. The above example gives a fair picture of how companies need to raise funds from the capital markets. Idea Cellular decided to enter the Indian capital market for its needs of expansion. In this chapter, you will study concepts like private placement, initial public offer, and capital markets, which you come across in the example of Idea Cellular. Business can raise these funds from various sources and in different ways through financial markets. This chapter provides a brief description of the mechanism through which finances are mobilized by a business organization for both short-term and long-term requirements. It also explains the institutional structure and the regulatory measures for different financial markets. Concept of financial market. A business is a part of an economic system that consists of two main sectors, household and save funds, and business firms which invest these funds. A financial market helps to link the savers and the investors by mobilizing funds between them. In doing so, it performs what is known as an allocative function. It allocates or directs funds available for investment into their most productive investment opportunity. When the allocative function is performed well, two consequences follow. The rate of return offered to household would be higher. Scarce resources are allocated to those firms which have the highest productivity for the economy. There are two major alternative mechanisms through which allocation of funds can be done, via bank or via financial market. Households can deposit their surplus funds with banks, who in turn could lend these funds to business firms. Alternatively, households can buy the shares and debentures offered by business using financial market, the process by which allocation of funds is done called the financial intermediation. Banks and financial markets are competing intermediaries in the financial system and give households a choice of where they want to place their savings. A financial market is a market for the creation and exchanges of financial assets. Financial market exists whenever a financial transaction occurs. Financial transactions could be in the form of creation of financial assets such as the initial issue of shares and debentures by a firm, or the purchase and sale of existing financial assets like equity shares, debentures and bonds. So these alternative mechanisms help to allocate the funds via banks or via financial markets.